Hello, everyone. I hope everyone is having a nice start to their 3-day weekend. I appreciate everybody letting me to take a week off from the videos. It was a good week to take off as we just did nothing but melt up higher on no volume, which is not surprising. However, I want to repeat the lack of volume in this market suggests that institutional investors aren't playing, that this is a high frequency trading driven rally, quantitative easing basically lifting the overall market. So it's not the most safest technical buy if you believe that the Nasdaq getting above its 50-day moving average here is the ultimate signal. If we would have volume above that yellow line in that middle window pane, I would be in agreement. But without the volume, you just can't really commit here. Technically, despite the Nasdaq being above the 50-day moving average, I'm still under a sell signal in my portfolio on the Nasdaq and the Russell 2000. As you can see, the Russell 2000 is climbing back up to its 50-day moving average. It still is relatively oversold, so it could still move higher, but like I said, we're going to need to see volume come in or else this normally doesn't end well. I mean, this is basically so far a repeat of 2000. The only difference is that the tech stocks being in a bubble, penny stocks are in a bubble. It's about the only difference. And with all that comes the complacency. You can see that the VIX has now dropped down to a new 52-week low at 11.36. I'll remind everybody, back in 2006, 2007, we were able to get this index down to below 9, and it hit 8.60 at the end of 2006. So there's still technically, we can still melt higher and on no volume before we're really oversold. However, the amount of upside left to the potential losses that could occur with the reversal, the risk reward ratio isn't there to go big. So if you're not heavily invested, I don't recommend piling into stocks here. But the New York Stock Exchange, Dow Jones Industrial Average, and the S&P 500 continue to look great. All continue to be under buy signals, but it's the lamest of lame buy signals. They don't get much weaker than that. For the week, actually, it wasn't that bad trading wise. It started out rough with BRF, but FUR worked, so FUR was good. BIP worked the next day. Then there were no new long signals except for PAM. I didn't take it, and it worked. So even the one I did not take worked. Then we added to WAG the day before, and it basically didn't fail. And then today, our one new long signal is RAD. RAD is breaking out of a very, very tight 2.5 week base, almost 3 week base, 3 week tight pattern on very strong volume. The only problem is on an arithmetic chart, you can see that the base is already pretty high up compared to where the uptrend started in 2013. The other thing is you can see the 200-day moving average is quite a ways away. So it's not like we had the longest base to go and buy a breakout up this much for this stock. So what I suggest is using limit orders. I'm going to put it around the 805 area, 808 to 805 area, and hopefully it gets filled. If RAD doesn't get filled, I'll be okay with that because it's only going to be a 2.5 position. Why I'll be okay with that is because I have some deteriorating technical indicators on the bottom here. Balance of power is going the wrong way, and even though MACD on the short term is turning up, the moving average is trending down. So that is a bit of a something that concerns me. But overall, it's not that bad. But today's pocket pivot point buy signal is good. The only problem is in between the two pocket pivot point buy signals, as you see, there were 3 pocket pivot point sell signals. So it isn't perfect. It was a good day overall. Wait, let's go ahead and do. You can see that for the week, some of the momentum plays that we played in the small cap arena continue to work well, like ENG. DXM is basing out. MITL, a recent earnings winner, looks like it wants to run. STKL keeps on moving. So there are some longer term plays that continue to hold up relatively well. VDSI was up 6.68%. That was a recent earnings winner. So there's still a lot of movement in the small cap stocks. And we got a great short signal in CRDC. But once again, 92-cent stock, you always have the possibility that these things can be bought out. But that is a great short setup. But overall, it looks pretty good. We only had 2 sell signals, and that's more housekeeping work. SQQQQ, more lower lows as the QQQ rises because it's stronger than the NASDAQ, even though but I have been using the NASDAQ for the signals on the SQQ. So we got to take another 25% off there. If it would be heavier volume, it would have been 50%. And remember, if it breaks below those March lows, it is completely done, i.e. if the QQQ breaks to new highs. And also SOX S, a little bit of housekeeping. That volume is basically close enough to average, and it's heavier volume. The 2541 close is below the 2588 open of 513, so that's another 50% sell. A close below the 2512 level and we'll be completely out, and that's, as you can see, only a few cents away, so be ready for that. But overall, market remains in an uptrend. No need to fight the trend yet, but it isn't necessarily healthy. Thank you.